Me okay? Okay. I don't know how I'm going to compete with that. I mean, I think Paul is actually quite cruel because he puts me after that. You know, it should be me first and then you come back and wake him up. In all seriousness, we've heard a lot about risks and issues related to using technology and operating in cyberspace, and a bunch of them demonstrated just now. I think it was Michael Baum who said, data is not insured, IP is not insured. So I think as companies become much more dependent on technology than what they are today, the question should be asked, can they be? So what I'd like to talk to you a little bit about is how insurance and risk management could potentially help plug some of the gaps. It's not going to plug all of the gaps. So basically what I propose to talk to you about today are a little bit about what the risks are, the threat environment, the legal environment in Europe, how cyber impacts the various industry groups from an insurance perspective, who should buy insurance. It actually shouldn't say who buys insurance, it should say who should buy insurance and will need it going forward. How can the insurance protect the corporation against losses, protect the balance sheet, and then importantly, what is in traditional policies that you probably already have versus what is in specialized policies that you could buy. It's important to think about risk management and insurance as tools to help prevent or mitigate the losses. It is not a panacea that will cover any ills and take away any the financial impact of any risks you have from operating in the cyberspace. It can help in certain aspects, particularly around areas such as data breach and notification, the cost of doing some of that, which is not necessarily the core to some of the businesses. I mean, we've talked a lot about this over the past 2 days, and so you recognize most of it, but I think it's important as a summary. Any organization today that operates with dependence on complex information or computers technology has severe security risks and issues. Whether you are a brick and mortar business using computers, whether you are a more advanced technology firm using all kinds of mobile devices or other technology, or you have a computer network, it doesn't really matter. Important part is also the SCADA systems and the dependence on new ways to do old businesses. Now all of this is important because the people I talk to, they are people who don't necessarily understand the implications of using technology and the risks that they represent. So what is the good news though is that technology risks and cyber/technology risk is on the agenda on most boards, and that's clearly this conference for the past 2 days have illustrated that fact. I like the quote on the bottom, which is essentially the impact of a technology failure or data loss is no longer a question of what if, it's a question of when, and I think everybody who's been talking so far has confirmed that. Now, again, I'm repeating some of the things that we have talked about over the past couple of days. The threat environment, but this is important to just set the stage for the insurance talk in a minute. The threat can come from a lot of different sources, and a lot of different angles to this, whether it's from social media networking, mobile devices, which we've talked about, whether it's from the employees or the human side that Mark talked about, whether it's from the external organized criminals, whether it's foreign or domestic, internal or external third-party contractors who open up a vulnerability to you no matter what. The use of technology in different ways and how that opens you up to the use of the attack of hackers, the introduction of viruses, malwares, etc. Structural vulnerability in how the system is designed, and so forth. We talked about mobiles, I haven't listed it on there, but it's important. There's also old ways of losing data. You lose your USB stick. Some of you may have seen me scrambling around there just before this because I couldn't find my USB stick. I was thinking, not me. But nevertheless, it happened. People leave things on trains, they lose things by simply throwing them away. Now all of this is about people, attitude, behavior, practices, processes, and configurations, if I quote some of the buzzwords of the past 2 days. Now, what are the criminals after? They're after your data, your reputation, our politics. What they want to impact is your profit, your profile, and your way of life. Now, all of this is important because from an insurance perspective, that will have an impact, some sort of impact. Now, there's lots of scenarios on here. These happen to be cloud-related. You know, things can go wrong and they can cost money. They can require certain actions. They can disrupt the business. They can cause the loss of very valuable information. A couple of people, I think it was the brand, Laura, was it? Mentioned Sona PSP, TK Maxx, and others, where there's an enormous amount of financial damage to customers and the company itself. There were loss of data. There was a business interruption in some of these cases that you see on here. There was identity compromised, and there was intellectual property stolen or misused. The reality is that the financial impact of a disruption or a loss goes up as your dependency on technology increases. Well, that's stating the obvious, because we talked about it over the past couple of days. Now, as Paul has said a couple of times over the past few days, crime pays. And so, you know, a little bit about what goes into that 27 billion number that we talked about, the impact in the UK. Why are they doing this? Well, they're stealing it. They're doing it. They're extorting. It's an easy way of obtaining valuable information that they can either sell or extort money out to you to avoid destroying it and so forth. Now, industrial espionage is a very large item on this one, and that's loss of intellectual property. You know, again, we talk about whether intellectual property is insurable or not. Maybe there is a solution there that can help. What this number does not talk about is the operational impact. So the disruption in running a business for, say a DDoS attack. This is the criminal side of things, which makes it an even larger number. So there are very large potential financial implications from cyber attacks, criminal attacks on the web, as well as operational issues that come from using technology. Now, what's important, and this has been alluded to, is that a lot of the smaller companies are subject to this. So I find this interesting from a risk management and insurance perspective, because a lot of my customers are the ones who have not got a lot of the resources themselves, so therefore they're more vulnerable. They depend more on the solutions that may be out there. And a loss, an attack, a disruption to the business from a cyber-related event can be much more crippling than for the bigger companies. Now, the legal environment in Europe is helping to drive the interest in the solutions that I'm here to talk about. The data protection and privacy law, as you know, vary by country and they're complex. The regional regulators are working to come up with rules that will basically harmonize the protection requirements, and that will force companies in the region to take better care of their sensitivity of their data. The US, for those who operate there and have data and handle data, already know that it's quite restrictive, and there's quite an industry for data breach notifications and credit monitoring, all of that kind of stuff emerging. Asia is a patchwork of rules and regulations, different requirements. There are no global standards and practices. Now, what is happening, it is changing in Europe in particular, and the next slide I'll talk about Europe, and that the cyber data breach and the rules that the regulators are putting in force will be a game changer with respect to the value that insurance in particular can bring. And I'll get back to that point in a minute. You've seen this. It's just a summary of what the EU data protection regulation means. It is interesting, though, because whether it ends up being 2 or 5% or somewhere in between, whether the notification period ends up being 24 hours, 48 hours, whatever it might be, there are certain rules that require certain behavior and certain practices. If you don't meet those practices, or adhere to them rather, you can be fined, other costs will be incurred, it will have a negative impact on your reputation. The good news from an insurance perspective and the insurance ability to help you is that this makes it fairly predictable. If you look at the situation in the United States, there's a reasonably good idea of what the average cost per record is, and I can't remember who said it, but I think the number was $214. Well, I've heard it range from a lot less to a lot more, but you can then use that to buy insurance to protect yourself against the unnecessary expenses that come with a data breach and the steps that you need to take to mitigate it because you're required to. So again, it can help mitigate the financial impact, and it will give you access to some of those specialized forensic and recovery service that some of you provide, that bought on a as-needed basis, probably a lot more expensive than they were built into an insurance product. Now, there's a long list of companies here that have potential cyber exposure. And the question is, who has the exposure and who should look into insurance today? The people that I spend the most time talking to at the moment are in the hotel and leisure business, the retail or e-tailers, entertainment and medical. You will notice that the Wi-Fi network here is completely unsecure. And a lot of times that will probably get a smart guy like the one on the front bench here access to the hotel and reservation systems quite easily. And we're finding that a lot of the hotels, because of all the data that they handle and how they, credit card information, personal information, you and your hacking, etc., are targets for this, and therefore interested in the protection that the insurance could potentially bring. I think a step back is to say a lot of these companies with those 3 or 4 categories in mind, what they're most interested in at the moment is to learning about what their risks are. What are the cyber risks that are facing a hotel or an e-tail or a retailer business? I'm not talking about the level that you guys know it. I'm talking about a fairly high-level top 10 list of things. But it's important when you're out there and helping your clients as well. It's interesting to look that a number of these industries are subject to cybercrime. When you talk to them, they're not worried about necessarily their exposures. But I think, again, hotel, retail, medical, and health are showing some significant exposures to this. And that's interesting to me. A big target for me is the government. I think the governments are particularly vulnerable in many places, and therefore should worry more about how they're exposing their own and other people's data. Now, when we're talking about insurance, we talk about what's called first and third party. So third party is the risk to others from what you do. The first party is your own risk. So what are some of the consequences from a cyber incident or a breakdown of a network or whatever not? Well, there are impact on others and impact on you. So if you look simply at the top bit there that talks about legal liabilities to others from disclosure of information, economic harm suffered from others from your computer or network security, failing or releasing information, legal liability for data breaches, and then go down to the first party bit, which is loss of revenue to you from a network that's been disrupted. Well, those are terms that the insurance industry understands. So that's liabilities and potential impacts the insurance industry could cover. Now, each of those risks can in turn turn around and give the other side an implication. So that's why it's important that you look at policies in terms of both your activity and impact on others as well as your own. The one thing about insurance is that it is a product that's written for the 1930s. It's a product that's written for manufacturing people with brick and mortar type assets. Insurance is doing a very poor job, has done a very poor job, trying to respond to the world that we're living in with the kind of activities that we're doing. I had a conversation with a a leading Irish tech company yesterday who struggled with the idea of having to wait 12 hours for the insurance to kick in when they said, well, we're dead in 8, 2, 4, you know. So there is a lot of challenges in what I'm going to say. Having said that, there are things that you can do as a company and your clients can do to make sure that you milk or take advantage of what is available and then look at how seriously the exposures are and say, okay, shall I put a specialized policy in place? With good understanding of what the cyber exposures are, you can convince an underwriter to give you a good solution. Now, for those of you, I realize that most of you are not insurance related or insurance experts. How many people are in the insurance or risk management arena here? That is 3 people, if I'm counting correctly. Okay. Well, you can help the people around you with advice then, as I talk. Traditional insurance policies, I said, were not meant for cyber-related type of activities. For example, property policies are based on physical triggers and actual damages. Errors and omissions, so for those of you who don't know what that is professional indemnity policies, is for services that you provide to others. They're still tied to professional services and further an act of negligence. In the cyberspace, that the cause of a cyber impact on somebody else may not be tied to professional service or have anything to do with negligence. The general liability side of policies are typically meant to cover bodily injury and tangible property. Data is not tangible property, and it may not be physical bodily injury, which means a liability policy, then if it excludes, it doesn't cover responsibilities you have from operating in cyberspace and so forth. Crime policies requires intent and covers only tangible property, money and securities and others, and are not covering data or if there isn't intent, so it's unintentional. So the key I'm saying here is that you should review your insurance policies to make sure that what's in them is fit for purpose, and also that you can get what is available out of these policies if you already have it. If you are looking, if it's determined that you need a dedicated data breach solution, first place to start looking is it in your professional indemnity policy for those of you who buy that. A lot of it can be added to that. For those of you who don't buy a professional indemnity policy, you need to make sure you look at what's available in the specialized market. Again, property policies are based on physical events occurring, such as fire and flood. The hacking, virus, or network denial service is generally not to be considered part of what a property policy will cover, and the courts have been pretty clear about that. Data is not tangible property. Business interruption in a traditional policy, so in a traditional sense, if you have a factory and a fire shuts it down, you stop producing, that is a business interruption. The insurance will respond by paying you loss of profit or revenue, depending on how it's designed. Traditional policies will not respond if the business interruption is caused from a shutdown of the system, from a computer or systems failure. So you need to make sure that if you are, as the case of the company I met the other day, 81% dependent on online revenue, the traditional solution is not going to work for you. And they're very rare that the traditional insurers will give you non-material damage, as in the situation that I just described. There's one, Factory Mutual, which will give you some, but it's a 48-hour waiting period. For those of you who are in, online retailing or any sort of that, you know that 48 hours is almost meaningless because it's over by then. Question you would probably ask me afterwards is, why don't the underwriters just don't change the way they insure, and why don't they just remove any exclusions to these policies to give us what we want? And the reality is they don't understand it. The insurance business, the way it's set up, is very traditional along lines of coverage where it's all reinsured around the world to multiple reinsurers and so forth. Cyber doesn't fit neatly into any of these buckets. Well, that makes it a real challenge. That's why you need to look at specialized insurance solutions if you want to. Again, I mentioned general liability policies. Probably the most important one there is, for example, web-based advertising. It's in many cases excluded under the advertising injury in a traditional policy. Some of you may have a liability with pure financial loss in it. Because the general liability policy only covers tangible or bodily injury, then you may actually inadvertently think you have cover and you don't. Again, crime policies, I mentioned, requires intent and only covers money, securities, or tangible assets. Data may not be covered because it's not considered a tangible asset under the traditional crime policy. The employee may not have intent. The corporation certainly didn't have intent. So I think it's very important that you check what's in the definitions or exclusions on the policy if you are looking for cyber. Professional indemnity policies are probably the ones that can be done the most with if you have it. They're, again, bought for firms who are providing advice. So they depend on this happening in the course of you providing that advice. If the breach that you create or the disruption you create does not come in the course of you providing advice, the policy will not respond. There are extensions you can get in the E&O policy that will cover intellectual property, cyber, overall, as I said, confidentiality breaches and so forth, but again, in the course of providing service. It's also important, if you think back to what I said on the example around data breach and the cost of each record potentially being quite large, as that particular that particular scenario is developing in the EU, and this is the case in the United States, do you want a policy like the professional indemnity policy to be eroded? That means the limits disappear for a data breach loss when you are actually, the reason you bought that policy in the first place was to protect you against contractual obligations you have from providing a service. So that brings you to the need for a specialized policy again. Now this is an example of, just to illustrate what I've just said, that when we do an exercise where we map out what the client needs or wants on the left-hand side, so things like destruction, corruption, theft of your electronic information assets due to a failure and so forth. So down the left-hand side are the issues the client are faced with. The policies leading up to the last column is basically the ones they have today. And you can see from that analysis that the yellow gives you some hope that there is something you can add back in or can modify the exclusions or the provisions to give you some cover. But in most cases, traditional policies are not meant to cover any of the things like information assets or network business interruption, non-fiscal situations and so forth. So in this case, the conclusion is the client will need a broad privacy and cyber policy to be able to respond. Have cover that will respond. Now, there are specialized insurance solutions in the marketplace today that will cover things like liability to a third party as a result of a failure of your network security to protect against destructions, deletion, or corruption of third parties' electronic data, denial of service attacks against internet sites or computers, transmissions of viruses to third-party computers and systems. I'm reading that one particularly, and I'll let you read the other ones, because if you take that description, you go back to your old policies and have a look, they more or less reflect the language in the exclusions. So the whole purpose of these are to build that kind of cover back in, and you can obtain those from a series of specialized markets in both here locally or in London, for example, or Paris. There's specialized cover around data privacy, liability, I'll touch base on in a minute, often linked to the crisis management, identity theft, and response cover. For me, the crisis management and identity theft response is probably where I see the most interest. And that is because it is paying for things that are, as I said early on, are specialized type of services, nuisance type expenses where a quick response is really important. So rather than figuring out who you should call, you buy the insurance policy. Within that policy are those services. They come, whether it's with Chartis who are here today and have recently launched their new product, or there are other insurers, they often have those services linked to it. And you can talk to them about that. My instinct is that that is where most of our clients are going to look for insurance as a solution, because that's an immediate and unique need. The European scenario is such that liability in cyberspace is not yet there. It's not yet as severe as the American situation, but it's changing. You also got areas like cyber extortion, networking, business interruption, and data asset protection. So the first party bit, your own. Now there are companies who are looking at the implication of their computer systems going down to be so severe that they're looking to add on the network business interruption element of this to protect themselves against catastrophe downtime that is not covered in traditional policies. I wanted to focus a little bit more on the privacy liability side of things because it is important, it is different. It is, as I said, a particular area that I think will become much more important to us here in the EU over the next year to 2 years. You can debate whether it's 12 months or 2 years, but it's definitely happening. Now, the difference between the specific breach policies are that they are focusing on the information, obviously confidential information, personal, commercial, but what's really key is the cause doesn't matter. It's a breach. So they'll deal with negligence or non-negligent, intentional acts, computers doing it, vendors doing it, whether it's through a hacking attack and dumpster phishing or it's employees doing it. They will cover legal liabilities, defenses and claims expenses. Depending on how this works with the EU, there will be some considerable defense and other claims-related expenses in terms of monitoring costs, restoration costs, and all of that. They will provide that crisis coverage that will help that also important reputation of the company. And so your ability to offer your customers credit remediation, credit monitoring, ID theft investigation, forensic expenses, the companies will be covered for crisis management and public relations and all of that. So managing yourself out of a crisis, I think, was Lorraine talked about yesterday, wasn't it? Brand, making sure that you're handling your brand correctly in a crisis. Cover for notification cost. Again, these are expenses that, will they cripple a company in the FTSE 250? No, probably not. But will it be very helpful to the smaller companies who are earlier in their life cycle and therefore depend more on their reputation? Yes, they definitely will. Whatever you do when you're buying insurance in this space, as in other place, you have to look for the exclusions. And I don't know if the word funny is the right word, but even in the cyber policies, some of these sneak themselves back in. If you have a cyber policy that excludes the use of computer systems, it's worthless. If you have a cyber policy or any policy intending to give you some cover that excludes viruses, worms, etc., again, it's useless. So my point is, make sure that you check what your policy says on the front is not taken away on the back again. I'll give you a couple of quick case studies. How am I on time? Have I got 5 minutes? Okay. There's a couple of case studies, and I'm happy to share this with you afterwards. That will probably put this into a little bit more real feel for you. I mentioned the hotel earlier on. The case study here talks about a back-end system failure where the check-in and the billing and the room management, the staff coordination system got out of date, they lost information, all of that. Without that, they were unable to bill, unable to process the customer, check them in, check them out. The reception became chaotic, incorrect bills were issued, they lost money. A cyber policy, correctly designed, would provide cover for the lost revenue and fund the increased cost of working. So bringing in a new system, having people, the specialized expertise come in. Depending on the size of the hotel chain, that could be valuable. an office business had legal action brought against it again, from a competitor. And a throwaway comment was accidentally released via an email that was disparaging to a competitor and, sorry, to the supplier and the competitor, sorry, no, it was a competitor, yeah. They make a long story short, that caused a $450,000 settlement. Now that is a cyber-related liability because it happened using email systems, computers. So cyber policy in force, investigator covered the policyholder for legal expense, the fight he had, and the cost of the settlement. Website hosting failure, the equipment failed and the online sales function was unable to do this during high season. Website downtime resulted in loss of sales of revenue. Cyber policy would have covered the loss of income from the loss of sales. Stock control system, which meant that the store's system did not order, when you rang up the dress or the shoes or whatever, the system, the till interacted with the website but ordered the wrong sizes. So the whole inventory of that company was messed up. And that policy covered a loss of income from the loss of sales. An engineering company again sent out the breach accidentally sent up a pricing list to end up in the wrong hand. The settlement was substantial and the policy there covered legal expenses and the cost of settlement. Again, something that wouldn't be covered under an E&O policy or liability policy because it wasn't in the process of providing service or it's not physical, bodily injury. The website failure I mentioned again, the charity relied heavily on donations. The website was down, couldn't pick up donations during this particular period, and as a result it was detrimental to the business. The cyber policy covered forensic investigation work into the cause of the failure, met restoration cost, and it covered policy for loss of income and increased cost of working. Again, another stock control system, which I can skip, I think. So in other words, cyber insurance, while it's not common, it's available and cost effective. It's usually accessed via specialized insurer in London, Paris, or more recently in local territories like here, for example. You can get up to $300 to $400 million in third party, not by one insurer, but by many. I don't think most of you in this room is going to need nearly as much as that. 100 million first party in the business, so property damage, business interruption. There certainly are bespoke insurance programs that can cover a lot more than that if required. Premiums and prices, retentions are all over the place. It depends on the company's size, risk profile, and activities, and how well you can document some of the best practices that have been talked about here over the past 2 days. If you've got good IT secured, you can document it, you've done the pen testing, you meet all the requirements, chances are you can do pretty well. And that impacts also that deductible that I'm talking about there. Premiums, it's like saying, well, geez, between $100,000 and $250,000 or more. I use dollars, we're an American firm, I could have used euros, wouldn't have made that much of a difference. Deductibles from $5,000 to $100,000 for the property damage, waiting periods for business interruptions, 8 to 24 hours. Charges, I think, will go as low as 6, depending on the situation. That is really, the last bit is really, really critical because that's often what makes people walk away. So the better prepared you are, the lower the deductible you can get. There are a lot of series of services that we recommend, and a lot of them has been alluded to over the last couple of days. Specialized privacy information security assessment, know what the issues are, identify what the risks are, map them out, make sure that you have a top 10 list, include a scorecard and a gap analysis versus where should you adopt different risk management and best practices to fix anything that might be wrong. Look at what the potential financial impact is of those particular losses and model them. Try to benchmark them against what your peers do and what some modeling can actually determine what you think the consequence will be for you. Comes back to the risk appetite discussion that was discussed earlier. And finally, which is our specialty, is coverage gap analysis and then cyber insurance procurement. Look at what you got, what can you get, what you need to buy. So that's me in a nutshell. many of these risks are not new, but the medium that is bringing them to you is new. Sound risk management can mitigate a lot, and for the next few years, risk management, whether it's preparing against a hack attack, whether it's using firewalls and all that kind of stuff, is going to be really, really important. But I think rather than depending just on IT security, you need to look at the best principles of risk management to help you do that. So you're talking about governance, which our chairman talked about. You're talking about identification, risk appetite, linking it to an effective strategy around compliance to make sure that you do what is most effective. And that means don't blindly rely on security solutions. That means combining the two. And that's why I thank Paul for bringing me and a couple of the insurance colleagues here, because I think it's a partnership. Again, remember, traditional insurance does not work automatically. You need to map out the coverages that you need that you have against the risks, and then look at what you need. Come up with an alternative strategy for procuring insurance if you feel you need that. Look for a specific insurance to protect you, as I just said. 2013 to 14, I think it would be a game changer because of the privacy and data breach issues that we're about to face. It's time to progress, and we're here happy to help you. So on that note, I hope that wasn't an afternoon game killer. Insurance can be, but if you have any questions, I'm around for another hour or so before I leave. If not, pull us more details.
I'd like to ask you.
Sure.
If people put in an effective risk management approach from enterprise down to this, will it reduce the premiums that they will be charged for their insurance policies?
Where's Chartis? No, I mean, I think that I know where you're coming from. If in any other traditional insurance type of insurance, the answer is an absolute yes. In this case, it should be so.
That recorded?
It should be so.
It will. Thank you very much.
Thank you.
Fredrik, thank you very much.
You're welcome,
indeed.
sir. Sorry.